Hi, I'm Alex, welcome to the channel and thanks for tuning in. So in today's video I want to talk about three main things. Now the first one is that I made a fuck up in my previous video on CCIV. Now it's not a massive one, but I want to explain to you what I said wrong, correct that, and explain why actually it doesn't change the points that I was making, but just want to get that point out there. The second thing is I want to say thank you to everyone watching and to everyone who subscribed, because we just hit 5,000 subscribers. I can't quite believe it myself. We've got there way quicker than I expected, and along the way we've built an amazing community. So thank you so much. I also want to talk to you about quite an exciting plan I have coming. And the third thing I want to talk about is some analysis which I've done on the EV SPAC sector this year. This analysis looks at how a number of EV SPACs have performed this year, from the point in which the SPAC was formed, all the way through to the point in time at which its share price peaked, and then looking at the performance of those post-merger completion and post-changing of the ticker. When looking at this, we will also discuss what this may mean for CCIV if the rumour that it's merged with Lucid Motors goes ahead. Now this video is not to debate my views and opinions on this rumoured merger. If you want to see that, check out my previous video. However, this video is just looking at this analysis specifically and what it may mean for the stock price for CCIV going forward. If you're new to the channel and you like investing related content, then hit that subscribe button. The YouTube algorithm doesn't like my unpredictable upload schedule, and as a result, oftentimes my videos aren't put on people's homepages. So if you want to make sure you don't miss the uploads, hit that bell next to the subscribe button, and then hopefully it should appear on your homepage. If you like the video, please hit the like button. It's so helpful in pushing the channel to a wider audience. And as always, I'm not a financial advisor. This video is purely for educational and entertainment purposes only, but let's get straight into it. Now in my previous video on CCIV, I did make a mistake and I'm sorry about that. Ultimately, it doesn't change the points I was making, but I think it's important to clarify the mistake I made. When referring to the CCIV SPAC, I referred to it as a $400 million SPAC. Now that is incorrect. As you may also have seen in the article I linked up, this was in relation to CCVI, the sixth SPAC from Churchill Capital, rather than the fourth one. When filming the video, I quickly checked on my phone and picked the wrong SPAC, so genuinely I am very sorry for that mistake, and I didn't mean to mislead anyone. CCIV, the fourth SPAC from Churchill Capital, is a $1.8 billion SPAC. When I was talking about this, I was specifically talking about the share which the SPAC may have in the pro forma ownership of Lucid Motors if the merger does go ahead. And ultimately that doesn't really change my point. The SPAC will still have a fairly small ownership stake in Lucid Motors. On the basis of the rumour so far, we're led to believe that the valuation for Lucid Motors is around $15 billion. Given we know the SPAC is $1.8 billion, when you look at that 1.8 over 15, that gives you an ownership percentage of around 12%. Now I know that's not the lowest ownership any SPAC has ever had in a pro forma entity, however it is on the lower end of the spectrum. So again, sorry for the mistake, however the point still stands true. All in all, a small level of ownership in the pro forma entity is not an issue in itself, it's just something that we as investors need to be aware of and need to understand. The point I made about perhaps there needing to be a pipe in this deal still stands true as well. And as we learn more, if we do and the transaction does progress, that will all become clear. Now the second thing I want to talk about is the fact we've just hit 5,000 subscribers on the channel. Now I can't say thank you enough to everyone who's subscribed. I know it does sound really cliche when people say this, but honestly it's so appreciated. All the nice comments, all the support, all the involvement that everyone has with the channel, it's really massively appreciated, so thank you. In my full-time office-based job, I am an investor, and I typically have weeks which are 60 to 80 hours in length, and sometimes even more than that. Oftentimes my videos are filmed at the very early hours of the morning, and I've done so on very little sleep. So when I see the comments of people enjoying the videos, finding them interesting, having learnt from them, it's massively motivating to me. And that in itself is also very motivating to make sure that every video I upload on this channel is trying to be better than the last one. That's something I commit to on this channel, and if we can overlook the mistake I made in my previous video, that's something I hope to continue. So thank you again, it's massively, massively appreciated. I have had a number of people ask me about a Patreon page or a private Discord group, and whilst I do see a lot of people doing those on YouTube, I want to do something a little bit different, something that adds way more value to everyone who wants to be part of that. Now I'm still trying to finalise exactly what this looks like and exactly how it will work, and I know I did say I would have it ready for when we hit 5,000 subscribers, however we have got there a little quicker than I anticipated. So I will, in a separate video, cover exactly what I'm planning to do once it's finalised. However, what I'm thinking of is something slightly different, something with a smaller group, something where information which I can't share on YouTube for whatever reason that may be is shared amongst these people, something where we can share portfolio and investment ideas, something where I can share what SPACs I'm invested in, but also my main portfolio, and somewhere where I can share with people who are interested my models, my financial analysis, all the research I do when getting comfortable with making an investment. If that's not something you're interested in, then don't worry, I will make sure I still keep the same quality of content uploaded to this channel as well. However, if you are interested, then keep an eye on future videos, and as soon as it's ready, I'll be sure to update you all. Thank you again though to everyone who's involved in this channel, for everyone who's helped us achieve this amazing milestone. I really do think we have an amazing community growing here, and I'm really appreciative to every single one of you. Thank you. And the third thing I want to talk to you about is some analysis I've been doing on the EV SPAC market and how it's performed over the last 18 months. What we'll then do is we'll take these findings and then apply them to CCIV, assuming that the Lucid merger is true and does progress, and see what that may mean for the stock price performance for Lucid Motors. Again, this video isn't getting into it. I've already made my position very clear in my previous video. I am invested in CCIV, but I got it at a much lower price than it currently is at. And this video is not to discuss the merits of whether I believe the merger is going to happen or not. For anyone who's been involved in the EV SPAC market over the last 18 months or so, it has become very clear that the stock price performance does not trade in line with the underlying business performance of these stocks. The same can be said about the wider EV market overall. However, in this analysis, we're just focusing on the EV SPACs. When I say not trading in line with underlying business performance, I mean that the stock price is growing way in excess of any KPIs the business reports. For example, the stock price is growing way faster than the number of vehicles these companies are producing is. It's growing much faster than the revenues, it's growing much faster than the profits. All of these are typically benchmarks one may look at when trying to understand a share price valuation. However, there has been a lot of investor interest and a lot of hype about the EV sector this year, which has meant that share prices have grown in excess of these. So in this analysis, what I've done is I've looked at a number of EV SPACs which have completed their transactions over the last 18 months. Now it's just a sample, it's not exclusive, but it should give us an indication of the trends. What we've then done is we've taken the maximum market capitalization which each of these companies was trading at and compared that to the net asset value of each of the SPACs. As you can see, the SPACs selected are Nikola, Fisker, Hyliion, Lordstown Motors and XL Fleet. And as you can see in the chart in the corner of the screen, all of these have had phenomenal growth from the net asset value. Nikola being the greatest at just under 560% from its net asset value to the highest point it was trading at, and Fisker the lowest at just under 110%. On the basis of this peer set, this implies an increase in valuation from the net asset value for EV SPACs of just under 300%. Taking this just under 300% average of the peer set and applying this to the market capitalization of CCIV, and then on the basis of the number of shares, calculated the implied share price, this ultimately shows that if CCIV was to replicate the same performance as these other SPACs which have all completed their merger, then we could expect CCIV to reach a maximum share price of just under $40. One could argue that perhaps looking at the average isn't fair for Lucid Motors and that you should be taking the upper end of the range, this being on the basis that Lucid Motors already has an impressive order book, is well set up with its manufacturing facility to deliver quick mass manufacturing, and some other factors which do differentiate Lucid Motors from some of these other SPACs that may have been at an earlier stage in the overall business development. If that is the case and you take the upper end of that range being Nikola, that would imply a maximum share price for CCIV of just under $66. Now the reason we are looking at market capitalization here rather than just share price is to make sure we do correctly capture the impact of warrants and what happens with those post-merger as they're exercised and how they dilute the share count, whether they're exercised in cash or whether it's cashless exercising. Then looking at the next step of this analysis, one of the main criticisms of a number of EV SPACs this year has been the fact that they haven't performed well from a stock price perspective post-completion of the merger. Taking the average of the companies we're looking at here, that demonstrates a decrease in the average stock price of around 44%. Applying that to the average of the maximum share price we calculated earlier, that gives you a share price of just under $22.50. Now looking at our bull case scenario where we said actually Lucid Motors should be valued at the upper end of that spectrum, we could then also argue that given its positioning, it should be at the lower end of that decrease post-merger. So in that case, taking the 16% decrease, as we saw with Lordstown Motors, gives you a potential share price of around $55. Now I should re-emphasise, this analysis is purely indicative. Yes, it does have flaws. However, I've done it to understand what the potential implications could be if the rumours are true and the merger does proceed. So again, this is just a quick and directional analysis. It's impossible to predict how the stock will perform, if it will follow the trend of other EVs, or if it will perform completely differently. With all that being said, it doesn't change my position on what I said in yesterday's video. Ultimately, given where we are in the process, I don't believe it stacks up from a risk-reward basis based on where the current share price is. The important thing now is to see how the news progresses, see if the transaction progresses, and from there understand whether this is a solid business and one we want to be invested into. Now there is one thing I do want to address that got raised in the comments of the previous video, and it was someone suggesting that this is completely risk-free, and because if the merger doesn't go through, they will just find another target. Now yes, whilst they can find another target, that target may be seen as second best, it may not have the same investor interest, and it may not reach the same level that other SPACs have. What's more, there's no guarantee that it may actually complete a deal within the time frame. In that case, cash would have to be returned back to the shareholders, and in that case your downside is quite large. It's top marks for trying to pump this and suggesting that this is as safe as a risk-free government bond. However, that's factually incorrect. Anyway, thank you so much for watching. I hope you enjoyed the video. If you did, please smash the like button. If you're new to the channel and you like investing related content, then hit that subscribe button. And as always, please let me know your thoughts and comments in the comment section below. I find it so interesting to hear everyone's thoughts and perspectives. So please get involved. Thank you so much for watching, and I'll see you in another video.